welcome everyone to this episode of the Credit Union Connection. I am here with three glorious gentlemen. We have from FedFinancial COO, JJ Johnson. Welcome.
Thank you. Thank you.
And Director of Lending, Carlton Brooks. Welcome.
Thank you.
And last but not least, the Equipifi CEO and co-founder, Bryce Deeney. Welcome.
Hey, nice to see you.
Good to see you as well. So, let's get started. Let's talk about, guys, JJ, Carlton, can you talk a little bit about FedFinancial and your location and field of membership, demographics, that kind of stuff that kind of give us some context for where you all are coming from?
Oh, okay. Well, first of all, thank you for letting us come and talk about an exciting product. FedFinancial, we're actually located in Silver Spring, Maryland. Our field of membership are federal employees who work in the Baltimore, D.C, Maryland, and Virginia area. And our mission has always been to help members meet their financial needs. And that's why we're partnering with Equipifi to do their buy now, pay later program, which we're going to call SpendFlex. So it just gives an opportunity to let people flex their budgets in a personalized, meaningful way. And like you said, as federal employees, we're just trying to reach a younger generation as they start to come into the workforce.
All righty. Carlton, anything to add there?
I think he hit it.
right.
We're totally excited about our partnership with Equipifi and being able to offer SpendFlex to our members. We are the first credit union and bank in the DMV area bringing this type of product to their members. So we're just totally excited about it.
Yeah, that's great. And so I'm going to ask, this is for, I'll throw this out to everybody, but Bryce, let's start with you. How do you see the current economy, inflation, wage stagnation affecting consumer spending and borrowing behavior? And is that generational, as Carlton kind of mentioned a bit ago?
Yeah, in the high inflation era that we're all living through right now, I can at least speak personally. My water heater broke a week ago. I had a plumber come out, and I got sticker shock when he told me, and he said, "Well, the last batch was stuck on a barge in the Pacific, so now the price is twice as high." So this is impacting not just low income, but really everybody, all the working class throughout the United States. So. With inflation high, we still need to run our day-to-day lives. And the nice thing is credit unions are here to offer credits. It's literally in their name to members that need it. And the most important thing is where do consumers get the credit from? Is it priced fairly? Is it priced adequately? And is it delivered in a channel where I want it as a consumer?
Yeah, definitely that consumer demand driven experience coming to the forefront. How about you guys from FedFinancial? Are you seeing like similar behavior in your specific areas of service as far as like consumer spending and borrowing?
Yeah, we're starting to see that more. Members want that financial flexibility because right now, before we brought on SpendFlex, they would use our debit card, but they'd have to go to the PayPals and the Affirms to get that split pay payment. So now with SpendFlex, we're now able to offer that to them all in one place. And I think that's something that people wanted. They want these quicker answers. They want to be able to go to our online banking app and say, "Hey, can I borrow against this for the things like Bryce said, the water heater? Can I borrow for those things?" We're giving them that opportunity. And that allows us to, like we always say, we want to meet members where they are. And I think that's something we get to do in this environment now.
Yeah, and as director of lending, I see our loan applications come in, and we could tell over the last, with the economy the way it is, over the last year or two, that we are seeing a decrease in our personal loan applications. So when we did some of our research to say, looking at our members and where they are, a lot of them have already embraced buy now, pay later solutions like JJ mentioned, your Klarna, your Affirms, your PayPal, and trying to meet our members where they are. Knowing that we're a trusted financial institution for them, we thought SpendFlex would be a great way for them to flex their payments, flex their budgets, and we wanted to, again, meet them where they were.
Yeah, no, and absolutely. The BNPL has really grown exponentially in popularity.
Oh, yeah.
I mean, the market, I was looking at some statistics. The market's currently at $132 billion with 360 million people using buy now, pay later platforms. And that's projected to go up to 900 million people in 2027. So what kind of trend are you seeing in Fed financial service area? Do you have measurements on what member demand has been like, or what you've already launched? So what's the usage been so far?
So for us, it would actually launch live to our membership next week. So
Oh, okay.
what we're doing now is we're wrapping up our testing, working alongside Equipifi. But what we've done is we researched our members and their transactions in the past. And we saw that they were already embracing buy now, pay later. We don't have a percentage of what that looked like, but it was significant enough that we thought we needed to try to meet our members, as JJ mentioned earlier. And so we thought with SpendFlex, meeting, Equipifi, kind of all just lined up together to where we can, and again, be one of the first financial institutions to bring this solution to our members. And they already know us. So we're not a third party organization or fintech offering this type of solution. They know us, we know them, there's a trust there. And we're really happy about bringing it to our members.
Yeah, yeah. And so Bryce, it sounds like a great time to be in the buy now, pay later business. What brought you to found Equipifi and why credit unions?
Yeah, well, those are actually the same answer to both of those questions. Prior to starting Equipifi, I was an executive at formerly known as Alaska USA Federal Credit Union. Now they're Global Credit Union, one of top 20 credit union in the country. And I was head of payments. So my job day in, day out was how do I serve our members and meet them where they are? And how do I ensure that our product roadmap keeps us as a credit union competitive for top of wallet share and market share within the communities that we service? And in 2019 and 2020, I started to see companies like PayPal and Klarna and Affirm were used more and more from the members that called us home. Fast forward to 2021, when we started Equipifi, those numbers continued to double year in, year out. And then the pandemic only made that happen much, much faster. So I knew that my credit union could use a product like this to stay top of wallet and engaged with our members. And after calling a few friends at other credit unions, they all said, yeah, if that product existed, we would buy it and launch it too. So I guess like most founder stories, I saw the problem, I felt the pain, and teamed up with a couple amazing co-founders and launched Equipifi. And that was a few years ago. Fast forward to today, we are now servicing over 35 credit unions across the country. We're a CUSO, we're backed by credit unions financially. And why credit unions? Because I believe in it. I believe in the mission and purpose and values that credit unions service their communities.
Yeah. And it's so important credit unions, partner with fintechs, and it's so much better when it's also a CUSO, I think, keeping it in the family. So, as you guys have all mentioned, the younger generations are the ones that are kind of gravitating toward this. It's like 42% of those adults under 24, 50%, 25 to 34, 50% of those 35 to 44. Apparently, I'm no longer one of the younger ones, younger generations, but it drops off after that. Has that also been what you've seen at Equipifi, Bryce?
I think one of the fascinating things, we are the only platform enabling this on existing debit card issuers, right? So all of the stats that you read today, that's how third-party fintech sees buy now, pay later rollout. So if I'm shopping at an e-commerce website, do I use my bank card issued by my primary FI, or do I use third-party BNPL? And yes, that button at the merchant checkout is very attractive to the 19 to 44-year-old, as you called out. But when it's provided from your trusted institution, what we've seen is it goes across all demographics, not only generationally, but income bands as well. The largest power user we see is an older millennial making over $100,000 a year. That is not what the third parties see, because those consumers prefer to bank with their trusted credit union or financial institution. They're not clicking the PayPal button, which we're unlocking that market for them.
That's awesome. That's awesome. And so JJ, Carlton, at the same time, I was shocked to learn the average age of a credit union member is 53. 53, and that's up from 47, I think, about 10 years ago or so. So while this is reaching all the demographics, are you also hopeful it will add to that younger member as well at Fed Financial?
Yeah, that's one of the main reasons we wanted to use the buy now pay later program, because today's kids, they don't want to go to fill out an application, wait for the approval, wait for the funding. They want answers now, and I think they get that with SpendFlex. And I think the fact that working with Equipifi and the way it integrates with our online banking and a mobile app, they get that quick information, that quick answer that they want. And we think that's definitely going to entice them to come join the credit union. And that's one of the reasons why we think it's very important to use SpendFlex to reach that audience. But at the same time, we do realize that our current older members, once they get the hang of this and use that, I think they're going to be just as interested in the product. And I think that's definitely what we're going to see.
Yeah, it's the old layaway that we were
Right. Exactly.
Put a little technical
Right.
spin to it. But
What's that? I'm just kidding.
the baby of the butt.
So, guys, when you were looking for a buy now, pay later solution, what sort of due diligence did you perform, and what would you recommend for other credit unions looking at this type of solution? Because you said trust is so important, so you got to really know who you're working with.
Yeah.
Carlton, you want to jump in?
I agree 100%, and I think once we met Equipifi and we did that kind of initial introduction and our own research, we realized that they were the perfect match for us. I'll use the word turnkey solutions. They got us down to a science. So where we wanted to go, they knew the map, and they were able to, ride with us, drive with us to get us where we are. They've been very helpful, not just only partnering as here's a product, do what you will with it, but they've helped us with the setup, establishing parameters, even in the marketing, how you roll it out to your members, what makes sense. It really has been a very seamless process. Their process works very well with our core system, so it was easy to link that up. And they've really got us down to a science. So it's been a very, very smooth process with Equipifi.
Awesome. You don't often hear that with new implementations.
Yeah. And to add to that, Equipifi, they pretty much they just held our hands, got us through this. And as you know, we're used to implementations taking a long time, problems. We had few problems with these guys. They just got it up and rolling. And so that's just definitely kudos to Equipifi and what they offer to the credit unions.
Absolutely. So Bryce, what are some of the common questions that you get from credit union executives when they're looking at your product, and what do you wish they would ask?
I love that you gave me that second question. Some of the common questions we get, at least in the very beginning, is, why should we do buy now, pay later, right? The last several years, it's been kind of like this coming wave. But a couple of years ago, if you would have asked 1,000 credit union executives, are you planning on launching buy now, pay later? There was maybe like me and a handful of other executives that would have said yes. Where last year, I believe Jack Henry did a study where it was 13%, and then it was 18%. So 18% is still a large amount, right? That's almost 1,000 credit unions that are planning on launching BNPL, but that's still 4,000 that aren't. So there's still a lot of educational components that we have to walk credit unions through, that this is not only something that you can provide your members that's better than what they get out from third parties, but it also helps you stay competitive for that next generation of consumers who are looking for a place to park their money, right, their deposits, and borrow from. So the questions I wish a credit union would ask. Now, as far as what I wish credit unions would ask, if you read about buy now, pay later, just in the last week, Chase Bank launched debit card buy now, pay later on their checking accounts, on their debit cards. Affirm just partnered with Google. So for the 130 million people that use an Android in the US, they now have a baked in buy now, pay later solution that's not from their credit union. So credit unions are being attacked as far as top of wallet from all sides. So it's not, should we do buy now, pay later? It's why are we not doing it today? I think that's the thing and the urgency that I feel as a former credit union executive. And that's why we are partnering with folks like FedFinancial to launch SpendFlex, because this is not only a way to remain competitive, but the urgency is super important.
Mhm. I know Financial is calling this product SpendFlex. Is this a white label, Bryce? White label product?
It is, yeah. We don't want to be the brand for the consumer. We really want to elevate our partners' brands and make sure that they stay the center of influence around, managing money for their members. So everything we do, even the marketing kits that we deliver for, our partner credit unions, is 100% white label.
Yeah, that's excellent. I think that's very important. And as you guys were mentioning too, very useful for your
It's a very robust marketing template. When I tell you, we told them what we were looking for, and it was like opening a gift. It was all there ready. So when you say white label, it's really, come up with a nice name, and we thought SpendFlex was a great fit for what we were trying to do, allowing our members to flex those past debit card purchases to match their budget in the next day or week as they needed to.
Mm-hmm. And so, Carlton, JJ, what sort of expectations, what goals do you have for the buy now, pay later once it is launched?
Well, our goal is to create a value-added product for our members. What we want to do is have a win-win situation, a win for our members that is a value-added alternative to other buy now, pay later solutions out there, a way to flex their purchases. So we feel like that's a win for them and for us at the credit union, as we discussed earlier, to retain our members across the board, but also attract new members. And if those new members are a younger generation, then all well for us.
Mm-hmm.
And I think that's our main interest. Is we definitely want to attract new members to this. We're hoping that through this process, more members say, "Hey, let me use my debit card in case I need to use this SpendFlex down the road." That's once again, there's that flexibility they need, and I think that's going to help us grow in terms of not only just interest income, but also debit card interchange and making people once again become our primary financial institution.
Mm-hmm. Yeah, that's so hard to do these days.
Oh yeah.
As the parent of an 18-year-old, 21-year-old, and I have a 21-year-old daughter-in-law, I hear them complain all the time about that kind of stuff. So we talked a bit about strategic benefits for the financial institution. So what are some of the financial benefits to the credit union? I mean, you guys talked a little about interchange and things like that it could benefit. So what are you all looking for in those areas?
We're just looking for increased activity. So, like I said earlier, continue to use the debit card for us. That gives an opportunity to reach out to the members. That gives more marketing when they use the debit cards and through the mobile app, because it's so integrated directly into the mobile app. Now they get SpendFlex. They can also get other offers from us. It gives us that opportunity to reach that audience. And I think it's definitely going to want people to utilize our services more. Now, obviously, that's what all credit unions want. We just want people to say, "Hey, let me use my card. If I use it here, I can use that. I get everything I need at FedFinancial." And that's what we really want to hear people to say. So I get everything I need at my credit union. I can do that. I don't need PayPal. I don't need a firm. I just need FedFinancial.
Yeah.
Perfect. That's the goal of every credit union out there.
Exactly.
So Carlton, I'll pick on you now. What are the less obvious benefits to the member, other than obviously you get to split up payments?
Sure.
Are there other benefits?
Well, we are in-house. We are an organization that we are their credit union, that they know us. Again, they trust us. This is not a credit pull for them. This is based on their account relationship with us, the offers that they receive. There's nothing new they have to connect. There's no income. There's no download. There's no new connection, no new cards. Everything is as it was before. We're just giving you offers on purchases you would have made anyway. We're asking that hopefully you use your debit card to make those purchases, and be able to split those payments up into 3, 6, or 9 months if necessary.
Yeah, very streamlined, sounds like,
Yeah.
for sure. So with that, gentlemen, we're going to go Brady Bunch style for everybody's final thoughts. I'll start, top left is Carlton. What are
Uh,
your final thoughts on this?
I guess my final thoughts are, I think this is also, and we look at it as, and we talk about retention, but you mentioned a 19 and 20-year-old. I have a 21-year-old, and they will not sit down to maybe do a paper application. They may ask you to do the paper application for them. And I'm really big in teaching financial literacy. I do believe this is a product that would help them budget better. It keeps them from having to take out maybe a credit card with a high interest rate that goes on their credit report and maybe hurt their credit. So when they're trying to buy a home, they can't do it. I think this is a great way to actually teach financial literacy and have people take more control over their accounts, because the better you keep your account, the more offers you're going to see. So account maintenance is always important, and keeping that in good standing and not having NSFs or those type of overdraft things happening. And I think when you look at young people, they really need a product like this tied to their financial institution. So again, I'm really excited that we're one of the first, if not the first, in the DMV area to bring this to our members.
Yep. Excellent innovation. How about you, JJ? Final thoughts?
Yeah, final thoughts. We're just really excited about this program. Just like Bryce said earlier, with the Googles and the Chase having, it's great to know that a credit union as small as us can compete with them in that market. And I think that's one of the beautiful things that Equipifi brings for us. Now, SpendFlex, one of the first in the area, and we get to be a part of that. And I think the best thing you want to see is I definitely see members thanking us for the product, thanking us for this quick access, this quick information. And that's what we're really excited about. It's just we now are innovative, serving our members just as they would go to the bigger institutions. And I think that's one of the great things we're happy about.
Yeah, technology can certainly be a great equalizer.
Oh, yes.
Yeah.
For sure. So Bryce, last but not least, again, final thoughts for you as we close it up.
I just get so much joy, turning credit unions into fintechs. It brings a happy tear to my eye. Credit unions for decades, if not centuries now, some credit unions have been there for moments that are big moments in a consumer's journey, right? Buying a car, buying a house, getting a credit card for the first time. But I think one of the unique value adds that we're providing credit unions like FedFinancial is we're bridging the gap between shopping and banking. So the high engagement of a product like this, to where now members are logging into digital banking consistently and frequently. Fintech is not just the product, it's actually the outcome and how a consumer uses you as a financial institution. So seeing that now a 30-year-old or a 20-year-old is logging into their FedFinancial app twice a day is something that has never been done before. So I'm so thrilled to partner with these guys. They've been a great partner. Shout out to FedFinancial. If you live in those areas, please open an account. They've been great, and I really appreciate your time for this interview as well. It's always great to lift up partners like FedFinancial of how innovative they are and forward thinking as well.
Awesome. Well, thank you, gentlemen. Have a great rest of your day.
Thanks, Sarah.
Thank you.